started.
Well, I want to make sure it's actually working first.
No, it is working. It is working. Last time it did the same thing.
Okay.
Parfait. Fait que,
Alrighty then.
ferme la table. Yeah, you see when it starts saying prepare, it does. Could you close the YouTube tab so we don't have like that? Perfect. Okay, now you start presenting.
UV egg drone.
Perfect. Okay. Well, yeah. Welcome everyone. Today we'll be talking about stock analysis basics. I'll be speaking for this workshop. Paolo unfortunately couldn't be here today.
He's coming.
But he should be coming. I don't know where he is, but anyways. Now we already went through the agenda, but like what we're going to be doing is covering fundamental, technical, and a bit of sentimental analysis. But the two first ones are the main ones, and that's the ones that you should be using, that most investors use. And we'll cover some examples for both of those main ones, and then go through a few questions from the feedback that Philip will be posting back in the chat. So after the meeting, you can give us a bit of feedback. Some people want to see more examples that we'll try to do some of that. You just skip to the third slide, please, Philip.
Looks like a Darge has arrived. Looks like Mr. Petroni.
Is he here?
Yes, sir. Continue, Charles.
Yeah, well, I'm waiting for you to change the slide. Next one, yeah. Okay, so what exactly is stock analysis? Well, it says it in the term, but it's evaluating a particular trading instrument or investment sector of the market as a whole. Could you go to the third slide, please, Philip? Yes, thank you. Okay, now, stock analysts, they tend to define the future activity of what's going to happen. So what's going to happen with a certain company, what's going to happen in a certain sector. So just an example, people 2 months ago could have predicted what was going to happen with the industry of cruises, because it was the start of the coronavirus, but you couldn't be sure about that 6 months ago. So sometimes stock analysis, fundamental analysis, there's some components of both of those that you can use to find what's going to happen. But there's a lot of unpredictable things. So there's some signs you can see, and we'll talk about a bit of both of them. Next slide, please. Yeah, so it's the evaluation of a trading instrument or investment sector or the market as a whole. So the two types really differ in terms of what you're looking. One of them, fundamental analysis, is more on the fundamentals of the business or the sector, and the technical analysis is more on the technical statistical side. So we'll cover both of those. Then sentimental is a bit more, it's not an evaluation method, it's just about a feeling method, and we'll go through that really briefly because I don't find it very important. Like, it's important to know, but it's not a solid base to invest. Perfect. Okay, so we'll do the different types of analysis now. We'll go to the next one. We'll start with fundamental, because fundamental is probably the most important one, and it's the one that I use. So fundamental analysis concentrates on data from sources, not statistical sides. It's more about how the company is doing. So we'll talk about that. We'll also talk about quant versus qualitative analysis. Then what is the intrinsic value? Because fundamental analysis is measuring a company's intrinsic value, and then a bit criticism. And then I have an example Philip will put on the screen. Yeah, so fundamental analysis is the method of measuring an intrinsic value, aka finding a stock's real or fair market value. So there's a lot of companies that could trade higher price, lower price, but you want to find how much is that company worth, and you're using a lot of metrics to do that, but not metrics that are necessarily calculations. So you're going to look at profitability, you're going to look at liquidity. So liquidity is how much the assets are able to change from assets to liquid currency. then growth and liabilities. But in fundamental analysis, go to the next one, please, Philip. You'll look at a lot of that information is in 10Ks or 10Qs. So these are statements that companies have to file. So the 10K is the annual report that they file every year, and it's more comprehensive than the 10Q. The 10Q is it's more brief, I think. 10K is the thing to read. The 10Q is more quarterly report. Like
Yeah,
you'll
you
get a
froze it at that.
detailed annual breakdown, I guess.
I was just gonna say, the 10Q is in fact the quarterly reports, right?
Yeah,
It's what they'll just send it out to make sure that they're pleasing their shareholders and telling them that yes, we are meeting our goals or we're under our goals or over, so that the shareholders can evaluate the stocks, can evaluate the prices like properly in order to not have any under promises, any over promises, and keep their stock price either up or
yeah.
constant.
Actually, I have Philip, you want to let me share my screen just for a second?
Yep.
So I'll share my screen. I have both tabs here, but wait, I'll just open that. So here's Berkshire Hathaway. It's the biggest conglomerate that exists right now, Warren Buffett's company, and they published for each year. They publish quarter results and the annual results. So let's say if we look at first quarter 10Q, it has a bunch of information that are a bit like useless, I guess. Like all that is just SEC regulations. SEC is the it's the Security Exchange Commission. It's a governmental agency in the States, and it's just per quarter every information that's required to send. So for example, financial statements, page 2 or 3. So you get to see assets, their balance sheets. All that is in millions, I think. Yeah, 22,000 million. So it's 22 billion here. Then you get liabilities here. So liabilities is very important because it's part of how a company is liable in a certain way. So you get all that. So that's the that has 50 pages. And then if you go back here, I'll put it full screen so everyone can see it. Yeah. If you go back and you check the annual report has, normally what companies do is they have an annual report that's like nicely made. So that's the RBC annual report, and it has the requirements, but it's in a more designed, like well-made way for investors to be able to read it. So like the annual report here has normally chairman's letter, which is Warren Buffett's letter. Then it has the form. Then it has a bunch of other things, or you read the official one that's sent to the SEC. That looks like the other one. You see the format's the same, and it has 132 pages now. So quarterly has 50 pages, annually has 132 pages. So you can guess that the annual report has more critical information on the growth of the company, and look at the 10Qs to be able to see quarter per quarter. Are they changing things? Are they making stuff happen? Okay, Philip, you share your screen again. So.
Yes, sir. 1 second.
Yeah.
Here you are.
Yeah, go to the next one.
Yep.
So the fundamental analysis has two components. There's the quant one and the qualitative one. So you want to be able to measure, to use the numerical term, the measures that are available to you. So balance sheets, income statements, statement of the 10K, like at the top, it's a lot of numbers, and when you see them, you compare them to previous years and stuff. So it's all hard numbers. But also, what differentiates fundamental analysis to other types of analysis, so technical, for example, is we're really looking at qualitative measures. So the business model, it's not something you can count, but it's something you can analyze. competitive advantage. So for example, Amazon's advantage in the whole market is, well, they have the bigger share and they also have more resources than I'd say Walmart that's selling online as well. So just for the online business of selling a lot of goods, Amazon has the competitive advantage versus Walmart. Then you want to look at a bit of management and corporate governance. So the policies that they put in place, how they run the business, and also who runs the business. So Jeff Bezos has been doing a really good job. Do you trust him in making him continue his good work? I think so. Versus has been declining a lot. JC Penney, which is a big retailer in the States, they're not developing their online at all. So that's why in the past 4 years, their stock price went down from 8 to 12 and down to a few pennies. So these metrics are less tangible to analyze them, but they're still very important because it checks what the company's value is. Yeah, Philip, you join. Next slide, please. Yeah, so the intrinsic value is looking at what the company is worth. So is worth like the market value. Wait, let me just check my screen because I have dual screens here. So an analyst, they often refer to the true hypothetical value of a company. So let's say I'll give you an example. A company's stock was trading at $20, and after a lot of research, an analyst finds that it'd be worth that it should be worth $24. So the intrinsic value $4, but then another analyst says it should be worth 26. So do you use the $24 value or 26? So you just do the average of that. It's trading at $20, so it's undervalued. So that's how fundamental analysis goes hand in hand with value investing, just to see, is a company undervalued or overvalued? And that's one of the strategies I use the most. So I'm talking a little about personal experience, where I'll try to find a company that's undervalued so I'm able to buy it and know that it's going to go higher because it's worth less than it should be worth. Now I'll go, yeah, Philip, you want to go on the next one? I'll just open the chat while you're changing them. Okay. Yeah, thank you, Anne-Marie. Thank you, Anne-Marie. This is basically the exact plus extra 2 people. Yeah, there's a debate right now going on, so I'm sorry about that, but I don't want to penalize people that actually came. You want to click on the example, Philip? Okay. Go down a bit. Yeah, okay. So detailed things. Yeah. So there's a lot of ways, and I've shown you, you look at balance sheets and all that, but here are certain things that you can look in fundamental analysis. So earnings per share every quarter and every year, every quarter, companies have to, they have to release their earnings. So how much money they made in the quarter. And then what you do is you take those earnings and you divide them by how many shares that are distributed to investors, to public shareholders. So that finds an earnings per share. And normally analysts, what they do is they estimate that, okay, this company is going to be like $2 earning $2 per share. And when the company releases those results, if they're higher than what the analyst predicted, normally the stock will be going up. And then if it's lower, the prediction was, so it's going to go down. Then the price to earnings ratio is also another metric that's used. We'll talk about it a lot more later because I don't want to go on too long. I want to talk about everything, and then we could go in more specifics, especially next year. I think in person it's going to be a bit easier to explain. Phil, do you want to go down on that page a bit? Yeah, so all these ratios are really well used to analyze a company because they can show growth. So it's tough to it's tough to show the increase of a company's worth by just showing like prices, because a company can make an increase of 50% in revenue, but then they have a lot of debt. So there's a bunch of metrics that are used just to show how much it's worth. So the price to earnings value is pretty good. Price to book value. So a company has two values. There's the book value and there's the market value. Book value is all the assets, and then the market value is the value attributed by the market and investors. So the price to book value is also good. You want to keep going down. I don't know if there's more. Yeah, return on equity. How efficient a company is when using shareholders' equity. So it's a lot of calculations in the quantitative like component, but it's really efficient. Now, the example I want to show you is the fundamental analysis of Amazon, which is I'm talking a lot about Amazon, but it's a really good example. So Philip, you want to go down a bit? Yeah, so Amazon is the ultimate symbol of the tech sector. Then it has beaten the EPS, earnings per share estimates, in the past 4 years. So that's why you can that's why using fundamental analysis, you can see that it's a very strong company. Now, earnings per share have been very low compared to the stock price. So that leads to a very high PE ratio. Normally, you want to have a PE ratio, price to earnings ratio, a bit lower. But when you look at the PB ratio is nearly 20 is very high. So if you look at those ratios, they mean certain things. So the price to book value ratio of 20 means that investors are currently paying 20 times higher for the Amazon share compared to the book value of the company. So they're paying 20 times higher than what it's actually worth. Like if you calculate. And then the P ratio is investors are willing to pay 98 times earnings. You want to keep going? I think there's one more at the bottom. And then, yeah, return. I don't want to talk about beta too much.
So to where do I scroll? Here?
No, just go up, just go up, just go up a bit. Just go up, yeah. You can see that Amazon has a return on investment of 26.7%. That means that it's more efficient if you look at all the others in the tech industry. So Facebook, Microsoft, Google, PayPal, they have mid 10s to 20s. So has a return on investment of 48.7%. So you see that Apple is a bit more efficient, and Apple is also a bit predictable when it comes to coming out with iPhones. Historically, they've always been going up after release of an iPhone. So that's that. You want to go back on the slides? I want to go fast because I don't want to, I want to be done in 15 minutes. So yeah, now we'll talk about technical analysis a bit. You just go on the next one. Yeah, I'll just stand up a bit because I'm tired of sitting down. So we'll talk about technical. Oh, I forgot to change it. Sorry. Yeah, we'll talk about technical analysis, not fundamental analysis now.
Charles, that's a really cool T-shirt, by the way.
Yeah, I know. Huh? Look at this.
Are you saying that you're also an investment icon?
What?
Are you saying that you're also an investment icon?
Well, I mean, I could, but I got this at the Berkshire 2019 meeting.
Charles, I want you to make a T-shirt with all of the Mary Invest execs. Okay.
Okay.
I second that. So everyone can wear their investing icon T-shirts.
Tia, you know what you have to do.
What do I have to do?
You know what you have to do now.
What do I have to do?
Make the. Never mind.
Make it.
Lame.
T-shirts.
Lame.
I'm gonna make the T-shirts.
Yes. Yes. Exactly.
Okay.
I just want to show you something real quick. So every year, Berkshire Hathaway sends, because I'm an investor, they send me an annual report paper form like 2 months after that the Americans get it because we're from the north. And this is the 50th anniversary one, and it's just gold and it's kind of sick, and it has a bunch of pictures in it too. Let me put this up.
Cool. Charles, you want to keep going with your meeting? Yeah?
We
Maybe?
got distracted by the merch.
Of course.
Then you
There's
got
more. There's more. There's always more.
When you go to a meeting, you gotta have your ID. And then
You gotta
send
have your
them,
investing
you
icon
send them
t-shirt.
your address, and they send you back your ID, and then you gotta wear them. And Berkshire Hathaway's meeting brings around 40,000 people every year.
Uh-huh.
I just thought it was cool to share it, so I shared it. Now we'll talk about technical analysis. We'll do so where it comes from, and then assumptions, then a bit of usage and applications, and then it has some limitations. So we're gonna cover that as well. And then if Sandra wants to talk about a bit of graph analysis because she knows what she's talking about, apparently, she can. Philip, you want to go on the next one? So what is technical analysis? So technical analysis is trading using and evaluating investments. Sorry, let me rephrase that. Investments by identifying trading opportunities with the statistical trends. So you're using price movement, trading activity, and volume and graphs to really look at how a company is doing. And you're solely analyzing it on patterns, statistic, prices, and trading activity. So it's not, it can be used on any security with historical trading data. So like stocks, futures, commodities, currencies. But I think we'll talk more about stocks, and then Sandra can talk about Forex if she wants. Since we're an investment club, mostly in stocks, I think that it would be better to start with stocks. And then next year, as we're developing our research groups, so once you get a basic understanding, you can start analyzing a certain industry. I think it'll be more fun to apply it like that. So that's what we'll do. Now, you want to go on the next one, Phil? Yeah, so there's a few assumptions that about technical analysis. So the first one is that markets are efficient. The market discounts everything. So technical analysts believe that everything from a company's fundamentals are already priced into the stock. So that's why they don't look at the governance. That's why they don't look at management. The only thing remaining is the analysis of price movements, and that's how they look at the supply and demand of a stock in the market. Then they also look at price moves and trends. So technical analysts expect that prices, even in random market movements, will show trends regardless of any time frame being observed. So right now we're in a stock market's doing not too good recently. It's been doing good last week, but this week has been going down mostly. And right now it's down 0.5%. The Dow Jones, but the S&P's up. So it's not doing like it used to. But technical analysts, they still think that there's trends in there. So most technical trading strategies are based on this assumption. And then finally, they assume that history tends to repeat itself. So technical analysts believe that history tends to repeat itself because the repetitive nature of the price movements are based on the market psychology. So when you look at volume, when you look at the price movements, it's all based on the psychology of what investors think. So Philip, you want to go on the next slide? So technical analysis is used to forecast the price movement of any tradable instrument, but mostly stocks here, using the supply and the demand. Across the industry, there are hundreds of patterns and signals that have been developed by researchers. I don't believe I believe some of them may be right, but it's tough, for example, in this industry right now to predict what's going to happen. So I think that they're not all of them right. but what they normally look at are price trends, chart patterns, volume indicators, moving averages. So you can make like what a moving averages is you look at a period of, let's say, 100 days, and you look at how much the stock has been moving up or down during that 100 days, and then you look at the current price. So that's what technical analysts use. And then support and resistance levels. So if you see a stock is always supporting at the same floor, and sorry, once it crosses that, there's a second floor. So technical analysts use different platforms and levels to establish prices, like stock prices, minimum and maximums. And then when you cross one, you go to another level. You want to go on the next one, Phil? Yeah. So limitations. Some analysts and researchers expect that the technical analysis show what we shouldn't. Oh, thank you, Tia. So same reasoning. Neither should business fundamentals provide very valuable information, and the limitations are they assume that it's already part of the market price. So sometimes, like, it does not always show what the actual company is worth. Another criticism is another like limitation of technical analysis is that history does not repeat itself exactly. So what happened with Yahoo, which was one of the first internet providers a dozen years, like 20 years ago, or AOL, like you see right now, the company is not dominating the same market. So it's a bit hard to ignore that the history of those companies where they were dominant and they were big powerhouses before, and now they're not. And then the third criticism, that it works in some cases, but only it doesn't work all the time. So you can use moving averages, but it also depends on the market by itself. So even if a company is doing well, we saw that airlines took a big hit and now are worth a third of what they're actually worth. So if you would have used technical analysis just for that big drop, you wouldn't be able to use the fact that airlines went down by a third. Well, they're down a third of what their value was a month ago or 2 months ago, and other companies didn't do the same thing compared to a crash, for example. And then other traders will also see a price decrease and also sell their positions and reinforcing the strength of the trend. So if enough people use the same signals, they could cause the movement to be different of what they actually are. So let's say everyone's looking at the volume and they're all selling at the same time. So if you're all using the same strategy, you're not really helping yourself because everyone's doing it. So that's a problem with technical analysis. Philip, you want to show an example or two? I think there's an example on that one. Yeah. Go down a bit. Yeah. Yeah. So there's a few things here that you can look. I'm going to be honest. Technical analysis is not really my thing. I'm more of a fundamental analysis type of guy. So I'm looking at that, and it's a bit disgusting, but I'm still going to explain it because it's important. So when you look at the different charts, you can use candlestick chart, which basically shows the open and close. Then Philip, I'm going to control your screen. Parfait. Okay. How the hell am I? Did you scroll down, or I don't even know how to scroll down?
Charles, it's making me go into settings and shit. I'm just gonna have you open the link, okay?
Okay.
Okay, wait. Let me send you do you know the link?
Yeah, I have the link.
Okay, so just share your screen.
Yeah. Okay. So there's different things you can use. like we said, the history repeats itself, and the discounts and the trends. But if you look at the Jesus, the ads are annoying. You can look at the candle start charts. Is also very used a lot because volume makes the volatility go up and down. Then trends, different trends. So like triangles, head and shoulders. So I'll show you what a head and shoulder trend looks like. So you got your head, you got your shoulder, and you got your other shoulder, and then there's also the neck here at the bottom, which is the line, which is kind of a support. And then once it crosses that, it will go lower. So that's just a brief example of patterns that and those trends. Then there's momentum. So you can look at the strength, the momentum tracks. That's how they call it. So you could find the momentum of a price change in stock like Disney. But it's all about these technical things that all combined together will help you find, will help you analyze with technical analysis. Then, like I said, support. When I showed you the neck here, there's some kind of support, but this I think shows it a bit better. So there's always a resistance of going higher than the moving average. So they take the moving average, all those, and then every time that it tries to goes up, there's some kind of resistance. Then when it goes over, there's a resistance of going downwards. So you see now it went down and it's trying to go down again, and now finally goes down. But there's again the same resistance to go higher than that moving average. So there's probably another resistance level here. I don't know if I can draw it. Yeah, I'll draw it here. Probably another one here, because if you see, like, it's, wait, actually, oh, I'll just make one. Seems fairer to be like that, right? So it goes down, but goes right back up, goes down, supports here, pretty much at the same place. Then here doesn't cross, there here crosses, but goes back up, and then supports here. So I think that's a good example of the resistance levels. And then finally, the moving averages, like I said, they if I go on TradingView, I'll show you what a moving average looks like, but you could just input a certain, we'll use Amazon. I like to use Amazon. We'll go on the full featured chart. And we'll add some things. So we'll add a moving average. Now, what I like about TradingView is it gives you really good detail about everything. Now, if you want to add a moving average, I think I remember. Okay, wait, I forgot they changed from last time. Where the hell is it? I apologize for that. Moving average, TradingView. There. So yeah, if you look at Bitcoin, and I don't want to use Bitcoin, well, we'll still use it because it's a good good example, just of moving averages. If you add them here, right in the middle, you see there the moving average, and then the support, the resistance of the high resistance of the high price and the low resistance here. Show the support right in the middle. So yeah, I think that's enough with technical analysis. I don't like it too much. Not very, I don't like it that much because it's complicated, but it doesn't value. Honestly, I don't find it values a company well. And then Philip, you want to go back on the slide?
Yes, sir.
Perfect. And then
just make sure I'm getting the right thing.
So that's it for that. Well, I'll talk about bits about sentimental analysis because it's a bit important, but sentimental analysis looks at different aspects, but it's basically if you're reading up on the New York Times or the Wall Street Journal or just watching TV and you feel a positive sentiment about the market, that's how it works. So your intent to invest. So you're looking at sentiment class, you're looking at negativity, you're looking at positivity, you're looking at just how the sentiment of the whole market in general is doing. So your brain arrives at a sentiment score based on a bunch of positive or negative or neutral emotions just stimulated by reading that text. So it's the systematic process of attributes from words extracting from text. So it's just your brain giving yourself like some kind of gut feeling. And I think that it's not good to use it only by itself, but if you can use it with fundamental analysis, for example, you can get a real feel about what the company is doing. I wonder on the next one, I think we're done after that. Go through some questions. Yeah, we'll go through some questions. If you have any, just shoot them in the chat. In the chat. Why are you doing a tie-dye yours, Tia? You want hoodies, okay. Any questions? Or I think Anne-Marie has a question.
Go ahead, Anne-Marie.
Yeah.
Where does it say I have a question?
Well, you just text me on Snap. I have a question.
Huh? I don't have a question. It was a great presentation. Thank you.
All right.
You can
Anybody have any
some,
questions?
some questions on calculus if you want.
Oh, no, I don't have questions for Charles
Yeah.
for calculus.
Yeah, it's true. Charles isn't smart enough. For that.
Oof. Just kidding.
Oh, okay. Charles left.
Charles has left the meeting.
Charles has left the chat.
Guys, it's fine.
Poor
We can
Charles.
continue from here.
Charles is upset. No one's asking him questions.
I'm upset.
Okay, I have a few questions for Charles. Where's Charles?
He
Charles
left.
left.
Oh, he
Yeah,
actually
Let's
left.
let's wait till Charles decides to come back.
I don't think he's coming back.
You don't think so?
Child.
He's
Sandra,
probably- He
Should
probably
we
does a
just
joke and I-
adjourn this meeting on his behalf?
well, how about you shoot your question first? Someone else will answer it.
I'll
Huh?
answer.
I mean,
I
you're,
got
you're
you,
the vice
Sandra.
president, aren't you?
Go
Bill,
for
aren't
it.
you like aren't you
Fine.
second in command?
Oh, look who's coming crawling back into the meeting. Look who's back.
Kick him out. Kick him out.
Meeting is done. Thank you.
Okay.
Well, okay.
That's all.
Bye, guys.
Sandra has questions.
I don't
No,
care.
Sandra's
okay,
questions.
meeting is adjourned. I don't have questions anymore. It's fine.
Philip, cancel the stop the YouTube stream. We're done.
Bye, YouTube stream.
Bye.